Good morning, everybody. Sorry for the delay. I think the mute button was on. So I've just been waffling to myself for the last minute and a half. Welcome to the Flow Show. Oh, bloody hell. Right, should I go away and start again?
Start over, man.
It's one of those days. Welcome to F.A.C.E. Oh, I'm going to have one of those moments. Still, I might have to give it all to you. I'm going to go and have a lay down. No, it sounds like a Friday, Eddie. I wish it was Friday. Anyway, good morning, good afternoon. Welcome to F.A.C.E, Thursday, the 12th of March. And here I'm joined, as you can see, by Stelios and Nick. So good morning, good afternoon, guys.
Morning,
Hello,
guys.
everybody.
Hope you're doing well. Right, I was waffling on about the sale we've got on, but that's been on your screen for the last 2 minutes, so you know all about it now. I've put the link in the Zoom chat with the code TFPVOL30, so get on that, take advantage of that. Right, let's get started. Going to kick it off over in Japan. We had Bank of Japan's Ueda speaking in Parliament. This comes roughly a week before we get the Bank of Japan decision. And the bulk of his comments centered around FX. He said Forex is one important factor affecting the economy and prices. He says we need to be mindful that Forex has a larger impact on prices than in the past. It could affect inflation expectations, and we will conduct appropriate monetary policy while assessing how Forex affects the likelihood of our forecasts. Now, this isn't the first time he's banged on about FX, but
yeah, Ryan, I'm still seeing the TFP offer.
I haven't taken it down yet, mate. I haven't taken it down yet, mate. All good, all good. Leave the advertising up for a bit longer. Marketing 101, mate. So yeah, Ueda, he's spoken about this before. So it's not new news, but just bring that up ahead of the meeting next week. Just is maybe a little nod to what's going on in the yen at the moment. Generally, the yen's behaving itself, although we obviously got dollar yen up at 159 overnight. The yen index, the BOJ's yen index, is down at 73.23 from 73.53 yesterday. So that's still creeping lower. Intervention threat, I don't think it's changed much. It's warming up, shall we say, the lower this index goes. So just to keep an eye on that one. Right, just to please Nick, I'm going to get rid of that. There we go. We've had ECB Schnabel also got the ECB meeting next week, saying the March projection will partly reflect the Iran shock. So there may be some things in there. So just be prepared maybe if they ramp up inflation forecasts or change those. It's not likely to be a hawkish move. It's just a reflection of what's going on with the Iran situation. So watch out for any algo blips. They see higher inflation forecasts and think, oh yes, the ECB are definitely hiking. Nothing's close to a done deal on that front. Most of you would have been with us on F.A.C.E yesterday when we covered the CPI report, which came in as expected. One of the numbers that people like to look at is the super core, the old 3 decimal places. That actually jumped to 2.746 from 2.671. So there was a little bit of a tick up in those numbers, but otherwise market not really paying attention to that data. So into all the Iran stuff. So Trump was out with a waffle yesterday. He was speaking to Axios, says there's practically nothing left to target in Iran. He said, think you can see great safety at Hormuz. He says on the reopening the strait, it's working out very well. And later on said that we've won. Following that, 2 drones hit Iraq's southern oil field, according to security sources, and more ships got hit overnight trying to get through the strait. So much for his safety calls and everything's doing all right, and we've won. That's what saw oil ramping up overnight. We had Brent knocking up back into $100, albeit fairly briefly, relatively briefly. But we got up to the 101s before it's calmed down somewhat. Again, we are just trading between the headlines. So we had all that sort of bad headlines negative headlines, and that came amid obviously the oil confirmation of the global oil release, 400 million barrels by IEA's Birol. The US and Japan going to make up the bulk of those. The US wants to swap 172 million barrels out and get back 200 million barrels within a year. So nice bit of interest on top. Japan also pumping. The UK going to find 13.5 million barrels under the sofa somewhere as well. One of the items that put a bit of a positive light on it was Chubb, one of the big firms who have stepped up as part of the US insurance program that they're trying to put into place, emergency measures, guarantees and whatnot. So they're going to be setting up as the main insurer for Persian Gulf shipping. So that releases some pressure for who's going to cover ships sailing around the area. Minor good news, irrespective of all the bombs and whatnot still flying around. We've had Energy Secretary Wright out not so long ago saying that Navy escorts can't happen now, but will happen relatively soon, maybe end of the month. He says the only option on the table is to destroy Iran's ability to threaten its neighbours in the Straits. Chinese government has banned refined oil exports for the rest of March with immediate effect. Everyone's going to be tightening up the screws on what's going out the door and keeping stuff for themselves. Obviously, we've heard from Iran as well. The president says that the only way to end the war is recognising Iran's legitimate rights, payment of reparations, and firm international guarantees against future aggression.
And a free Tesla for everybody.
Yeah, right? Exactly. Well, you're going to need it because there's no oil to power your petrol cars at the moment. Anyway, new Supreme Leader Khamenei was injured apparently in an attack yesterday, so already the target's on his head. The US intelligence has apparently said that the Iranian government is not at the risk of collapse, and that's one thing that obviously Trump is pushing for. We've also picked up on something going on, that Iran has been very quick to reply to headlines that have gone out in the press, on social medias or whatever, big lines, Trump saying we won, you'll get someone coming out on the other side. None more so than the early hours of this morning in Europe, where at 5:44 a.m., Reuters, citing an Indian source, said Iran is going to allow India flagged tankers to pass through the strait. 5 minutes later, Reuters' Iranian source said that that's rubbish, and they denied allowing those tankers to pass through the strait. So someone is, we suspect, is sitting in a bunker somewhere in Iran with a Reuters terminal, Bloomberg terminal, and access to social media, and he's jumping on every headline that he finds coming out. So they've been very quick to respond to some of this stuff. And lastly, on the headlines, we've got tariff stuff going on as well. There's going to be a 301 tariff investigation, which could look at currency manipulation, all sorts of stuff going on with that. And that's going to impact tariffs on EU, Japan and others. Japan says they wait to hear what's coming from that, but they're going to adhere to the current terms. EU Parliament said as well that anything that departs from the EU-US trade deal will be unacceptable. So just a reminder, we're still in the midst of that mess too. And that's where we are at the moment. Dollar has been a little bit bid today. Just seeing a little bit of softness coming in at the moment, but it's really been bid up again on what's happened overnight. Who wants to take it first? Stel, I'll go to you first.
I'm here.
Yesterday, day before, things look like they were, calming down a bit, but a couple of headlines and we're off and running again.
Yeah, it's let me take the screen. It's a race to be first to the headline and try to react to it. Replace current share, desktop one. There we go. So before I start, I just want to say a kind of a more general thing. we're seeing the reaction of yields and markets pricing central bank hikes now on the back of oil rallying, and inflation is going to be going to the moon, et cetera, et cetera. And I've said it before, I disagree with this viewpoint. And the reason is simple. When you have an extraordinary event like what's happening in Iran now, and you have oil going higher really, really fast, of course, a few months later on, you're going to start seeing the effects of this. But when you're a central bank and you're seeing such an event happening, which is definitely not a good event, right? So it's not going to have any good effect on your economy. And you are saying, right, this event is going to be pushing inflation higher. So what I'm going to do, I'm going to choke the economy. I'm going to tighten as much as I can so that I bring demand down and basically try to bring inflation down. You're just killing, you're adding another obstacle to the economy simply because you're following a guide that says you have to have stable inflation. They didn't think of all that when after COVID they started easing like crazy. Not easing, actually, they were writing the checks and sending checks to every American citizen and all that. That was a different situation. When you see persistent inflation, you have to go in and you have to start taking proper steps. But this is something that eventually, and I hope I'm right in this, eventually, when I say eventually, I'm talking about weeks, maybe a couple of months in the future, something's going to happen and will all cool down. I don't know how it's going to happen, but this cannot be a Ukraine-Russia conflict. This, if it escalates, is going to escalate really badly. So I would be very cautious if I was central banker right now, saying, right, this is going higher, inflation is going higher, so we're going to be hiking like crazy to balance that. I just don't get that. So I am seeing these projections of what is it, 2 hikes for the ECB now or something like that, and 1 for the Bank of England, and I'm just scratching my head how that can happen. But anyway, central bankers are central bankers. They do whatever they think is right. Their contact with the real world, unfortunately, is limited. And so, they do what they do. But anyway, let's have a look at start with yields. And we have seen this rise in yields, obviously, after the Iran conflict started. We are still within this big triangle, and it's interesting because we nudged above it, probably took some stops out, nudged below it, well, I nudged more below it, took some stops out on the other side, nudged back above it again. Now we're back below. So this is still coiling, and it's probably taking stops on both sides. I'm very interested to see how this resolves, because theory says that when there is when there's uncertainty, and this has been the biggest global conflict in many, many years, I think, because this is a lot more serious than something in what's been happening with Ukraine and Russia. This got the US involved. It's I think it's a lot more serious. So when that happens, usually bonds go bid. And this time, not only did they not go bid, they've actually sold off, and we're threatening with a breakout higher in yields. I am, if you ask me, what do I do here? I still think yields are going to go lower, even though inflation is projected to go higher. I think the safe haven flows into bonds, we haven't seen those at all yet. And I think that this pricing of hikes has gone a little bit too quickly from my view. So I still think this will resolve to the downside, but of course we're so close now to the upside that it could be today or tomorrow we break out. Let's see. 10-year UK is actually a lot cleaner, and we're still in this channel, and we've touched bottoms and highs. We broke down a little bit here in line with the US. We come back up really quickly, stopped just short of this. And I was on F.A.C.E that day, and I remember saying, this is getting really close, probably not a bad level to start getting longs in if you are so inclined, if this is what you think, not a bad place to get long in bonds, not in yields, obviously. And we've come back down a little bit, but again, we're also quite close to the upside. So yields are not broken yet, but we are close. The interesting thing is equities in the S&P, and I showed this chart a few days ago in the chat room, and I said I want to see. I circled this. I said, look, we've got support conference here, and for me to turn bearish in stocks, I really want to see this channel broken and taking these lows out 16.15, 65.15. Sorry. So we went down, we touched these, and we're right back up. So this is still, stocks are not doing great, but I don't see any technical evidence yet of turning bearish. And I know I sound very boring in saying this over and over again, but this is the way I look at things. And of course, I look at things on a much longer time frame than most people do. So for me, I'm not touching these. Until we either, if we touch this support zone here, I'm going to try long with a stop close by. And if we break below 65.15, I'm going to be going the other way. So big decision to be made, but at the moment we are still in the middle of this channel. The DAX also similar thing. I've marked the zone. Okay, maybe I haven't drawn it perfectly, but this is clearly an area of interest. And a couple of times we've crossed it and right back up. Not convincingly so, but it's still a bounce. So the DAX, same thing applies. I don't see anything bearish yet, but we are close. The dollar is trying to, get a little bit bid. Again, I'm going to just unfortunately repeat what I've been saying. Unless we break above 100, par 38, 39, 40, whatever that level is, I still think we're in this wide range. Yes, I know it's wide, 95.5 to 100 and a half-ish, but it's still going sideways. And we have to remember that the dollar is correlated with risk. So whenever you see a bad headline, oil goes up, dollar goes up. Well, equities should be going down, but they're not yet. So dollar going sideways. I've said it before, I'm going to repeat this. I wouldn't want to be long the dollar against two currencies. One is the Norway. I've talked about the MEX for a while, and I said when we were consolidating down here, I'm no longer bearish this pair. This is not a pair I want to be short dollars against, and we have bounced on this one quite nicely. The two that I still would prefer if you want to be short dollars is Norway, which is still consolidating here. It's really with the dollar gaining a little bit of strength. This is still not doing anything, so this is definitely looking like a bearish consolidation. And the other one, which I like against the dollar, if you are bearish the dollar, is the Aussie, which is now basically breaking out. So, okay, we're not at these highs, but we're very close. So again, these are the two currencies that I like against the dollar. And let's see what happens with those. Two more things to look at. Well, actually three. Let's look at oil. I mean, I don't know how to trade this. I haven't touched it, and it really is it's all about the headlines. So if you want to be trading oil, great, but just know that you're gambling on the next headline. So I'm not touching it. Let's look at the metals and then cryptos. And I think that will be it. Gold. What can I say about this chart? Sorry, I'm repeating myself all the time, but there is absolutely nothing to change my mind that this is just consolidating sideways and looking for another upside. I think if we break the 50-day moving average, really we have to break below 4,700 for me to say, okay, something's materially changed. So until then, this is just consolidating sideways as far as I'm concerned. So I'm still bullish on that. Silver is more volatile. Also trying to get out of this 38.2 retracement and the 50 DMA. There's a lot of action here. It's going one day, up 2%, the other day down 2%. I'm still bullish in the medium term, but I think silver is more dangerous to have a correction to the downside, maybe towards the 75 level. So before we resume higher, the one I really like still is platinum and palladium, and I think they've been underperforming quite a lot over the past years, and this is one of my favorite charts that I look at. Of course, it's a very long-term chart, but This is platinum against silver. I was very, very bullish and long silver last year, all of last year. Now switched entirely into platinum and palladium, and I think that they have there's a macro thesis obviously behind as well, and with the catalytic converters, and I think that this has a lot more potential than gold or silver, and this is the one I'm more heavily long at the moment of. Of course, we could see pullback. If things really start looking grim on the global front, then everything will get sold, everything, even gold. So could we drop towards the 1900 level? Of course we could, but that will be an even better opportunity to add more to this loan, which I really like. And finally, Bitcoin and cryptos in general, trying to have some good days. Bitcoin at 70K, but really, again, this is almost, if I copy paste this, it's going to be pretty much the same thing, isn't it? Something like that. Unfortunately for bulls, so I don't see any silver lining in the clouds here for cryptos at the moment. So I will be very careful being long. And
Thank you very much, mate.
that is pretty much it. I know I repeat myself a lot, guys, but that's the way I view things. I don't change my view from one day to the next.
No worries, no worries. Nick, I don't know if Stella's left you anything to look at now.
Yeah, no, I got a couple things.
Put
Yeah,
your feet up.
how's it going? Yeah, so it's been an eventful 24 hours, and kind of what Ryan pointed out in the beginning. Um, we're getting these headlines from Trump, the war, we've won, and then, yeah, I think there is someone over there that's keeping up with the headlines. But yeah, last night just reviewing over charts, and all of a sudden ships are, getting hit with sea mines, and there's reports yesterday afternoon from the FBI out of California that sea drones might be targeting a hit. So it's confusing, concerning, not so fun to look at, but obviously we're trading it. So yeah, taking a look at the S&P here, it's sitting near the range lows. I did draw this support trend line here. A break of 68.13 could cause some form of a pop. I'm still under the impression that in the event that there's some de-escalation, that we could have a serious rally. But it's seemingly more difficult every day, and I'm not too sure how long this could drag out. And if I'm feeling that way, others might be, and the market just doesn't like uncertainty. That's the big thing about the market. So in the event that it decides to take out this low at 6,700, your next stop is that low before, but I agree with Stell on, I think he said 65.13. There is a 65.26 level. That's a 38.2 from the lows of May. So this whole zone will be very key in the event that it's taken out. If it is, I think 6,400 is your next stop. And we'll just have to see if we take out this trend line here. I think there's a decent chance we get up near the highs. The NASDAQ has been challenging a very similar trend line here. Was going at it yesterday, has failed to get above it, and I would say, yeah, a move above 25,137 uh, would incline that you could get up near the 25,570 level here. I think that'd be a nice little pop to maybe trade into. And then, yeah, if you get above there, you're likely going to all-time highs. The Dow has been taking a lot more of a beating, and it's been very well structured. We've had a break of this ascending channel that occurred at 48,300. It broke down, back tested the breakdown, which is not a good sign if you're bullish. And yeah, these lows here will be key. If they're taken out, you might be looking at the 38.2, and this is the 38.2 from the lows of April in 2025. So a very strong support level. And if you stretch it out just a little bit, you do have these highs from January of 2025 as well. So I think that this will be an important level here in the Dow, and we're definitely going to have to keep a close eye on it. The RSP continues to not look all that great. You have the S&P overall kind of sideways to an extent. RSP's really been breaking. We've had solid decline from the highs here, a full 5% drop. So we'll have to keep an eye on the support level here that comes in at 193. Again, you're just going to want to look for those prior lows from, was it Monday? Yeah. So I'm keeping an eye on those lows here. If this is taken out, I'll be watching this 191 level, two former highs in a previous spike low here on a pullback. So I think that this will be a solid level. I do feel like there's stronger support lower, and maybe we'll be headhunting some of this. You never know. Tomorrow's Friday. It could get ugly, so we'll just have to see. The Russell also in an ascending channel, still holding support though. It's held this 38.2 here. That comes in at 24.57. I'm going to be keeping a close eye there. If it's broken, I'd be looking at 23.66. From a shorter time frame, if you're looking to play some form of a pop, I'd probably be looking at a similar trend line to what's been going on in the S&P and the NASDAQ. So a break above 25.70 could offer some decent resistance. Oh, sorry, yeah, if that resistance is broken, could offer a decent pop. I was taking a look at TLT as Stell was talking about it. From a daily perspective, it's in this wedge here. So, Stell had mentioned he believes rates are still going to go lower. I agree. It has been it's been weird that this hasn't picked up. I'm wondering if there's something else going on. But yeah, if you're trying to play lower rates, a break of 90, call it 94, and TLT might be that signal for you. Moving along to some currencies, the dollar index still uh, not the same. It's challenging highs compared to yesterday. I do still feel as if this, 100 and a quarter level or so is very key resistance. It's a 50% retracement from the highs of March to the lows. You have three former spike highs there. I think that's really key resistance. If you get above there, I think you see a squeeze up towards 101 and a quarter. And I'll be keeping a close eye there. The main thing for me is you have this weekly trend line here that it's managed to get back above, and now it's back tested the breakout of that trend line here. So that's a strong sign, something to keep your eye on, and I will be as well in the chat room. I was taking a look at the dollar mex yesterday. I've always viewed the dollar mex as the currency VIX. I know the rand can be that too. But it does look like it's made a higher low. There's this descending channel here, broke back into the channel, back tested the support. I think this is a
Nick,
decent little setup. Yeah.
yeah, we've got data in about 20 seconds, mate. So
Oh, that's right. Yeah. One thing I will point out really quick is Amazon. It's gotten back into this range, tag of 38.2. They did just announce that they're going to be laying off 16,000 workers. So that's a development to watch out for. And we can go ahead and bring
mate,
it.
I'm gonna nick it
Yeah.
off you. Nick it off you. Right, we've got building permits out, trade balance data. Trade balance a little bit better, although the revision was worse.
Jobless claims in line.
Yeah, jobless claims, nothing as usual. Housing starts better, 1.487 mil versus 1.341 expected and higher than last month. And permits a little bit softer than expected, down on last month. So data a little bit mixed on the housing front. Jobless claims, meh. Trade data a little bit better. That trade stuff is going to be up and down probably now. We've got all this oil stuff going on, people releasing stuff, selling stuff. It's probably going to impact trade data somewhere in there. So that's remaining messy. Please stick around, folks. I forgot to mention we do have an interview today with David Wu. So that's coming up. Blake's going to be hot-footing it all the way over from Ninja Trader shortly. David wrote a book called The Merry-Go-Round Broke Down, a novel of guilt, greed, and globalization. So he's going to have a lot to say on the current macro outlook, no doubt. So stick around for that. Otherwise, data, not much at all. Nick, did you want to take it quickly and finish off what you're saying about Amazon?
Yeah. let's see here. So I will grab the screen. I just need you to cancel out of the
Oh,
screen.
sorry, mate. Yeah,
Oh, no
give me a
problem.
sec. There you go.
Yeah, so a couple of the currencies I was taking a look at, yeah, the dollar max. Another one too that I wanted to point out, I noticed in the CAD here, you take a look at this weekly trend line. This is from the lows of 2011. You have a decent support level here at 133.52. Uh, Also from the lows of June of 2021 to the highs, you have this 50% pullback here. I think it's a decent little area to consider getting long. Maybe it holds this low, but in the event it drifts lower, I do like this level. Moving along to some big tech. Yeah, Amazon's laying off 16,000 workers. Not the most exciting thing to hear, especially with all these headlines. We'll have to be tracking layoffs. I think that's going to be, a very large development over the next few years, and we'll just have to be on top of it. Microsoft, I feel bad for Microsoft holders. It's been, a long journey, sideways for a long time while the whole party was going on. Eventually broke out, bit of a double top here that's played out, eventually got back down into here. I'm going to be watching the support level here at about 384. In the event that's taken out, you do have a longer term trend line support that comes in at 337. I think that'll be a very good support from a long-term perspective. And taking another look too at SMH, semiconductors are always very important to stay on top of. From this ascending channel, broke down, got back into it. Support's going to remain here at 388. And I do notice Blake and our guest is here, so I'm going to go ahead and pass it on over.
Thanks very much, mate. Just before go to Blake, I just want to grab things quickly because I just want to have a quick look at a couple of currencies, just to get people up to speed of what's going on. We've had a bit of a breakdown in euro dollar. We've got this line that we've been messing around for a while, 115.70, 75. We've moved under that. We've been holding below it overnight. We've held below it today. Got a bit of support in this 30s area. Looks like a bit of a defensive bid up off that prior low near 115s. If we're breaking down through this today, keep an eye on that 115, because if we're busting there, it could have some legs to move on. Quickly, dollar yen, as mentioned, we hit that Jan 23rd high overnight. We've pulled back a little bit, not too far. We're still in the hunt. A break here, I'm just going to stick it on my weekly chart, targets this prior high, which was where they first intervened back in 2024, up at where was it, 161 or 160.16, just in there. We intervened up there. This is a big historical level, goes all the way back, if I can find it, back to 1990. So this is a big significant level up there, 160.16-ish, around there. So that's one to keep an eye on if we bust through this 159s properly. And that's it from me. Thank you very much. And over to Blake.
Hey, good morning, guys. How you doing?
All good, all good.
All right.
You?
Looks like we had a nothing burger with the the weekly unemployment claims.
Yeah, nothing there. Nothing in building permits, housing starts. Trade is going to be a mess if all this oil stuff starts going in and out of the US. So we can ignore that for the next 6 months probably.
Well, today we have like an amazing guest based on, first of all, he's an amazing guest because I've listened to him on CNBC for, I want to say probably decades now, it seems like, and we're gonna come to him in just 1 second. But more importantly, it's because of what's happening in this current environment. I couldn't even think of a better guest to bring on right now. So Ryan, I want to thank you. Nick, I want to thank you, and I want to thank all of our traders here, for being here today. But make sure you all stick around. This is a very, very important and pertinent interview. So I want to introduce to you guys Mr. David Wu. He's the author of a new book, Merry-Go-Round Broke Down, a novel of guilt, greed, and globalization. And this is from Regalo Press just this month, and founder of David Wu Unbound, and which I happen to be a big fan and a subscriber of his YouTube channel. David, welcome to the show.
Thank you for having me, Blake.
It's great to have you. Like I said, I've been a huge fan of yours for years. I remember seeing you over time, on all the major financial news outlets, and then, realized a couple years ago you broke away on your own. I subscribed to your channel, and I try to watch every video that you do. You really break down the global macro environment, which is awesome. And believe me, we're going to come to your book because I think it's really pertinent, in regards to everything that's happening. But as far as what's happening in Iran, could you give everybody your current, just like, big picture view? Because as traders, and this is a show that's dedicated to, traders that are more kind of swing traders, intraday traders, but we all try to cling on to some sort of macro theme to trade. What stands out most to you in this current Iranian war that we happen to be in?
Well, thanks for having me on. I mean, I just so that you know, I'm actually sitting here in Israel. I'm about a half-hour drive from Jerusalem, half-hour drive from Tel Aviv. I'm right now the center of the action. Hopefully, there won't be a siren going off, anytime soon, so we can actually, go through this interview. But let me tell you what I think is going on. I think, if you look at what's happening in terms of price action the last week, right? So the U.S. stock market has held up really, really well. I don't have to tell you. U.S. bond yields are mostly higher. So what the market is essentially pricing is an inflation shock as opposed to a growth shock. And the only way this can be an inflation shock only and not a growth shock is if you think that this war is going to be over very soon, which I think is still very much the consensus of the market. Most people, I have a big macro advisory business. Most of my clients, some of the biggest investors in the world, they think either Trump is going to tackle or that Iran will run out of resources very soon. So I think that is what's really happening. Now, let me tell you this. I happen to think that they're wrong, okay? And I think,
right.
I think the market still doesn't understand. I understand, a lot of people lost a lot of money betting against Trump last year because that guy can tackle faster than you can say your own name, right? And a lot of people simply just got caught on the wrong side when Trump all of a sudden wakes up in the morning and decided to change everything. So I understand the market is hesitant to bet against the perceived Trump's tackle instinct. But I think there is something very fundamental here that I think will make it very difficult for Trump to tackle. This is why I continue to think that this is going to be a messier war than what's been priced in the stock market. If I'm right, this is bad news for the dollar. I think this is, good news for treasuries. But let me see if I can basically make my case for it. I think fundamentally, we have to understand one thing, which is, I think the only way Trump can tackle is if he's still ahead. I mean, think about it this way. Had he tackled one day into this, after Israel took out Khamenei, he would have been able to declare victory and say, we just decapitated Iran. Now it's time to basically call timeout. But listen, at this point, I think the most important thing, to bear in mind as we go into the second week of this war is that Trump is no longer ahead. You could argue he's now behind. And there are many reasons for this. I mean, obviously, there's a fog of war. It's difficult to make sense of what's really going on. But I think Zelensky gave us a very strong clue when he said last week, okay, that the U.S. had used 800 Patriot missiles in the first 3 days of this war. Let's put that into perspective. 800 Patriot missile, what does that mean? Ukraine, as you know, has been a major recipient of these missiles over the last 4 years. Apparently, over the last 4 years, Ukraine had only gotten 600 of these missiles over a 4-year period, and U.S. ran through 800 of these missiles in the first 3 days. On top of that, people should also know, U.S. produces only about 1,000 of these missiles a year. And even before entering the war, the inventory of these missiles were very, very low level. Now, I would argue at this point, the U.S., I think, ability to shield the Gulf, states and their oil fields from Iranian missile attacks is severely stretched. Now, you might say, well, but maybe Iranians also running out of missiles. Now let's think about that for a second, because we know that Iran started the war with roughly around 2,000 missiles. They fire about 1,000 so far. By the way, let me tell you this. I mean, living in Israel, I can tell you that the missile attack from Iran hasn't been that bad compared to last June. And I can tell you why. It's because hitting Israel does not serve their purpose. What they want to do is to destabilize the global markets by forcing oil price high. This is why they are concentrating all their arsenal towards the Gulf countries, the oil fields, the Strait of Hormuz. But the important thing is this. Even if, let's just say, Iran only has 1,000 missiles left, we have to understand they have lots of drones. Iran produces more than 10,000 drones a month, my friend. When you are basically mixing drones with missile attacks, that can help you stretch essentially your stockpile of missiles. And by the way, most of the Patriots that were used, in the last 12 days were against drones. What I'm saying to you is that, in my humble opinion, there is a very good chance that Iran has more, US is going to run out of interceptors before Iran runs out of drones. And in my view, this is going to put Trump in a very bad position in the sense that he won't be able to tackle without having to concede defeat. That obviously he will never accept that. This is why he will have to take more risk. And we can talk about what that risk is to regain an advantage that he can spin as victory to walk away. But what I'm saying is that that's not what the market is pricing. And in the market, I think from that point of view, I think oil is I've been long oil since 60. I mean, obviously earlier this week after Trump, I lost 30%. I could have basically taken profit at 120, but I held on to my position. I still think that we're going higher, and I'm remaining short the stock market.
Now, you said something really interesting when you first started explaining all this, and David, the numbers that you are bringing are fascinating to me and to our viewers as well. But let me ask you this. You said ultimately it's going to weigh on the dollar and also on the bond market. So explain to us how that's happening, because the dollar right now is the de facto, risk aversion, the safe haven at the moment. And I can't see anything beyond that. It seems like crude goes up, dollar goes up. Crude goes up, people are fearful, everybody buys the dollar. Nothing else really matters. But you say that maybe won't persist over time.
I think, I think Nick Grove previously was looking at the chart, and I think he's right about, I think there's some serious, resistance that the dollar rally is, running into. Because the way we got to basically think about this also is that I think everything has happened markets-wise over the last 10 days. I would say it's just largely about essentially the position liquidation of crowded trades, right? The market was short the dollar, so everybody had to pay back the dollar. Dollar strengthened. Everybody was basically long steepener, so the curve flattened. Everybody was long EM equities, so EM equities got absolutely killed. And everybody was short Bitcoin, so even Bitcoin managed to rally. So my point here is that, first of all, I would say a lot of what happened over the past 10 days, I think has to do with essentially the, position liquidation. And as you know, hedge funds clearly had a very tough 2 weeks. I mean, in fact, the news this week has made it very clear that most hedge funds actually dropped a lot of money, which means they did not see this war coming, by the way, which is shocking to me, but it doesn't really matter. But clearly, everybody was in the wrong trade. So the dollar, the fact that oil prices went up and the dollar went up, I don't want to say it's a coincidence, because there are obvious reasons why the two things could be connected, but I don't want to basically overstate the case. But what I do think is this, right? Right now, you've got a situation where everybody, piled back into U.S. equities from international equities because of the safe haven effect, or just simply getting back to neutral weighting in their U.S. exposure. The point here is that if this war drags on, and then oil prices remains at over $100 for more than couple more weeks, let's just say, I have to say that the U.S. stock market is going to come down. Because at the end of the day, people right now are rotating money back to U.S. equities. But I think the next rotation is going to be into cash. So if, Russell is already going down, if QQQ was to break, NASDAQ breaks, I think then the market is going to start thinking about, maybe the Fed is going to be cutting rates soon. You see what I'm saying? The reason why the dollar is stronger rather than weaker is because everybody said, the U.S. stock market is doing great, so there's no reason for the Fed to cut rates. So we're going to get high oil prices. They might actually hike rates. This is why the dollar strengthened. But if the U.S. stock market starts to go down, then I think the rates market could very quickly get into an easing mode, and that is not going to be good for the US dollar.
Yeah, which is interesting. You know, I want to. I know we're talking about markets, and I actually want to shift to kind of looking past, what's happening right now, and kind of looking into the next couple of weeks. But I do want to ask you this question because I was just having this conversation 15 minutes ago with another panel. The bond market. We've seen fixed income when we went into Iran. 10-year, 30-year, 10-year notes, 30-year bonds. They ripped higher. They gapped higher. They've since given it up, and yields have rallied globally. We've seen, obviously, yields in the 10-year go up, but we've seen them. Look at Boons. Boons are cratering here. We're seeing yields, and I know this is your wheelhouse based on your previous experience for years with some of the biggest banks in the world. So, how do you feel the bond markets are reacting right now, and is it valid based on what we see?
So the bond market, again, that's what I'm saying. The bond market right now is trading. Oh, well, oil prices went up. Okay, so inflation is going to be high, so central banks not going to be able to ease more quickly, right? That's the thing. So as I said before, right now the bond market sees, this war as largely an inflation shock, and not yet as a growth shock. Because if this becomes a growth shock, if people have to start worrying about slowing growth and that kind of thing, I'm saying the bond market could easily flip into an easing mode. But for
which would
the bond
be higher.
market, the thing that exactly, and bond yields will be going lower, bond price will be going higher. But the point here is that, but for the bond market to basically switch into an easing mode, the bond market has to see clear evidence that the one market that has a PhD in growth, which is the stock market, starts to go down. Okay. Yeah. This is why it's so important, because what's been going on the last couple of weeks also is that all these retail buy on dip investors, right, are once again coming in. So, well, they don't care whether oil price 150, whatever it is. They all know is that we're supposed to buy on dip, right? So once again, retail investors are saying, oh, well, Trump is going to taco. Let's basically buy before the institutional guys do. So this is the reason why the stock market is holding up. The rates market's controlled by the institutional players, and these guys have no place that they can push yields towards, except for up, given the stock market's so resilient. And so therefore, to a great extent, I mean, this is actually kind of funny, but there is no doubt that right now, institutional guys are very scared of taking on the retail guys. The retail buy on dip guys have called their shot. It's not so much that, and I don't want to basically argue whether they got it right, got it wrong. They have been right in terms of, we said, better be lucky than right. But the point here is that, retail guys have owned this market over the last 12 months. And the retail guys have, I'm going to tell you, Magnificent Seven, they account for 40% of the daily liquidity. The Magnificent Seven is not going to go down without the retail guys basically stepping away. So this is why, institutional guys right now, they're frankly speaking, they're really helpless. They don't know what to do. This is why they're selling bonds, because they think that, well, if the stock markets hold here, there's no other way to trade this market. Okay. And that's
David, I know both of our careers started in the 1990s, and it is such a departure from thinking about mom and pop used to be in the market, but today in because of the internet, because of Reddit and message boards, and it's crazy how this market's changed, isn't it?
Absolutely. I mean, by the way, my book, okay, which you just mentioned, very nice. There are 9 chapters. And the fourth chapter is about a Mrs. Watanabe. I mean, you probably remember that.
Yes,
it's
of
sort
course.
of like, there was a time in the 90s, I mean, forget about the 90s, in the 2000s.
Yes.
Japanese housewives were basically, driving the Japanese yen, in fact, all carry trades. Okay, that everybody, I mean, all the big hedge fund guys, when they walk into the office every morning, when they get on a phone call with their salespeople, what they want to know. So what Mrs. Watanabe did, okay, overnight, okay? And so from that point of view, I mean, and this is why the world is complex. But there is no doubt that in my career, I do not remember another time that retail guys who are just trading technicals, and who believe that, stock market, you're supposed to buy on every dip. That's how you're going to get rich and retire and so on and so forth. It's driving the entire market. And which also basically says when this thing cracks, I mean, it's going to get very, very, very ugly.
Interesting. And I'm gonna come back. I'm gonna wrap it up with some things about the power vacuum that we might see in Iran post this conflict, if there is going to be one. But before I do that, I actually want to talk a little bit about your book because I haven't had an opportunity to read it. It's coming out this month. Is that correct?
That's right. At the end of the month.
End of the month. Okay, so I'm excited to see it. You guys can now obviously see the book, the cover. It is called Merry-Go-Round Broke Down, a novel of guilt, greed, and globalization. I want to ask you a little bit about globalization and how it's changed what we do as investors, because I'm assuming this is what you're talking about. A lot of this book is about globalization and how it shifted the markets. But what do you think about the reverse effect that we're seeing over the last couple of years?
Right. I think that's actually the reason why I decided to write this book. Because
Okay.
I started in FX, right? I did my PhD at Columbia University in international finance. I started my career at the International Monetary Fund in Washington, where I was doing exchange rate intervention policies. And then I, was at Citibank, Barclays, Bank of America. My whole life, FX has been a very, very important part of my whole entire career. And that is about understanding. It's actually very funny. Anybody who's been involved in FX knows that there is no, it's a relative value asset class.
Yeah.
Something goes down only because something is going up. In that sense, I think, there's no right and wrong in the way I think about the world, in the sense that there's there are winners and losers, and that's it. And that's what globalization's been about, right? Globalization has created winners and losers. The problem, of course, over the last 10 years is that the losers, decided that, enough is enough. And as a result, what we're seeing is this backlash to globalization. Now, personally, I think it's very unfair, because I would argue that those who lost out, meaning that namely the blue-collar manufacturer workers among developed countries, their problem was not globalization. Their problem was that the government, especially in the US, did not actually tax the corporate windfall during globalization to help essentially the people who lost their jobs in manufacturing to find another way out, to basically become educated or whatever they had to do. I think it was actually the fault of the US government, and you could argue maybe in European governments and so on and so forth. But it doesn't really matter. At this point, it's too late. But all I want to do is this. This book is about the human face of globalization. And I kind of feel like maybe the policy debate around globalization has been lost. I've decided to write a book I decided to write a novel only because I want to make the whole topic accessible to everybody, regardless of their level. And the whole attempt is trying to basically bring this debate directly to the people, because I think that the public needs to understand what we're possibly giving up on. I'm not saying that globalization is all great. I just want to make sure we don't throw out the baby with the bathwater. And again, having worked in foreign exchange and in international setting, I've traveled more than 100 countries and so on and so forth. This book is really about, again, I'm not pro-China, I'm not pro-US, I'm not pro anything, I'm just pro something that could produce a win-win. And this book is really about trying to, really expose both the good and the bad side of globalization, so people can actually decide which part of it we want to keep.
Well, I think it's going to be fascinating. I want to see what face you really put on globalization and how you frame it, because this is a novel. It's not like some nonfiction type of book, historical book like that. Is that correct?
Exactly. It's a novel. There are 9 stories. There are 9 protagonists. One, I told you, there's a Japanese housewife. There is an American corporate raider. There is a British prop trader. There is a Chinese, basically billionaire. There is a son of a Russian oligarch. There is a Norwegian environmentalist. There is a Mexican illegal worker. And there is, of course, a blue-collar American worker at the very end. But the point here, they're all taken hostage at the end of the thing. And then, the whole entire, essentially, book is about how they're connected, how the actions of one person has rippling effect throughout the world and have unintended consequences. In a way, I think globalization is the most amazing story of our lifetime, only because it touched everybody. I'm talking about everybody and everywhere. And I think from that point of view, I just felt like, nobody's actually written a book about the subject, not in a novel. And I think I want to basically make it entertaining. This is why I also basically wrote it as a novel, because it's a financial thriller, actually. But the main purpose is trying to help people make sense of how we got to where we are today, which is not a very happy place, let's just say.
That sounds fascinating. David, I want to wrap up with real quick. I want to wrap up with a question for you. Going back to Iran, how do you see this really playing out? Because you said, well, Trump, he can't really taco because, and I guess we could all identify that it's, we're not the only player. Trump and the U.S. administration and the U.S. as a whole is not the only player. There's no on and off switch. You're dealing with Israel. You've got Lebanon. You've got, you got a lot of different players in this. How do you see it playing out over the next couple of weeks? And where is the vacuum that's going to fill Iran if it is it going to be, Saudi Arabia, is Turkey, Israel, China? How do you see that all playing out over the next few weeks?
I think the only way for Trump to turn around the situation, you understand, Trump is now effectively a lame duck president after the Supreme Court ruled against his tariff. I mean, Trump knows at this point there's nothing he can do to, essentially put in the Republican Party in a competitive position ahead of the midterm. This is his bigger problem. He needs a win, which means at this point he'll have to take some risk now to basically get a win. Now, one of the things that I think they might try, and there's been some rumor about it, which is that they're organizing a special operation to grab Iran's enriched uranium. Okay, my wife is calling me because we just had an alarm. Okay, but the second thing, I'll be there in a second. The second, that would be very, very risky. You're talking about, essentially sending in special ops to trying to go to places we don't even know where they are, essentially in search of these things. That could be one thing, because if he could come out with the enriched uranium or basically blow up, he could declare victory. That he can do, but that would be very risky. The second thing they're going to try to do is to basically weaken the infrastructure of oppression within Iran so much so that they can then call on the Iranian people to come into the streets and basically and overthrow the government. But for that to happen, okay, we need to see much more destruction than we've seen so far, and that's easier said than done, because the so-called infrastructure of oppression, which are the police stations, the basically paramilitary, these people, these basically infrastructure assets are deeply embedded in the high-density population centers. I mean, you cannot go after these people without killing a lot of civilians. And believe me, these people are already walking around in civilian clothes. So from that point of view, Trump will either have to end up killing more civilians. The risk is that he either end up more killing civilians in an attempt to trying to basically reverse his fate, or that he'll send his troops into a very unfriendly place to grab this stuff. I think either way, these are the two options Trump has right now. And that is definitely not a good, I mean, either thing would be very bad, I think, for the stock market, personally.
Well, David, that sounds dangerous, but what's probably more dangerous is if we continue on this interview with those alarms going off in your background. Yeah. So, I want to say thank you so much. Make sure you guys and gals, and let me go ahead and just put this up real quick. Once again, David's new book, Merry-Go-Round, Go Broke, a novel of guilt, greed, and globalization. Make sure you pick up your copy. It comes out this month, at the end of the month. David, it has been a pleasure. Like I said, I'm a huge fan. I watch whenever I see your videos come around, I try to stop and watch them. Make sure you subscribe to David Wu Unbound, his YouTube channel. I'll put that link in the description of this video. So David, thank you so much, and good luck over there in Israel.
Thank you so much, Blake. And it was great talking to you. And it sounds like we have a lot to basically talk about in the future. Anyway.
We do. Okay. I'm going to have you back on, gladly, and hopefully we'll see how things shake out over the next couple months.
Sure. Absolutely. Okay.
You're amazing. Thank you, David.
Thank you very much. Thank you.
And thank you to all of our viewers. I'll catch you tomorrow on the F.A.C.E show. You guys all have a great day. Good luck. And I hope you enjoyed that interview. If you did, make sure you share this on social media, because I think that was a really important interview for the time. Ryan, Nick, what'd you guys think?
Yeah, brilliant. Loved it. Every second of it.
Dude, he's a wealth of knowledge. Yeah. Oh, sorry, Nick. I didn't mean to step on you there.
No, I really enjoyed it.
Yeah.
Yeah, it's scary too that alarms are going off. So I'm glad that he could get to safety.
Yeah, I mean, he's actually in Israel, which we do have a lot of Israeli viewers, by the way, that tune in every day. So, guys, real quick before we wrap things up, any observations here that you see right now that's got your attention?
No, just keep an eye on how risk is performing today. As I said, the dollar's got a little bit of a bid on. We got some key levels in play: euro, dollar, yen. So yeah, just keep a close eye on those headlines.
Yeah, and Nick, I want to come to you, but I just want to say I think everybody should be watching this 95 level in crude. You know, basically the highs. If we start breaking highs, we get above it, we stay above it. That means the market's not copacetic with whatever is happening, whatever headlines that we're seeing, whatever developments that are happening at that moment. If crude oil sits much above 95 for any prolonged period, that means Brent is well above 100. That means that you got to be careful of what's happening with risk. That's my observation. Nick, how about you?
Yeah, I'm keeping a close eye on the Dow. It's been leading the charge recently when things do break down, so that's going to be one of the first telltales for me. It was nice to see David mention the S&P going lower. I probably agree, and I think the uncertainty just continues to pick up. There's a big narrative reversal yesterday. It started off with we've won the war, everything's getting better, and then you have ships getting hit, ships set ablaze in the Iraqi waters. Headlines are shifting a lot. Market hates uncertainty. So, yeah, I'm gonna be also watching the headlines closely.
All right. Well, guys, it has been awesome to be here, and I hope you all enjoyed David's interview. Remember, there's going to be a recording out. We'll put it on our site. We'll put it on YouTube. Also, you can just rewind the recording. It'll be on X. So if you're following us on Twitter, you can find the recording of this interview there. So thank you guys so much. Have a great day. Good luck. And for those of you that are Forex Analytics subscribers, I'll see you on the Morning Edge in about 12 minutes from now. So have a great one. Thanks, everyone.
Thanks, everyone. Cheers.
Cheers.
Cheers all.